Hey guys, in this video, since earnings season is coming up, we're going to talk about IV contractions or implied volatility crush that happens over major news catalyst or earnings reports. So we have earnings coming up. We're actually right in the middle of earnings season, but we have huge earnings coming up this week and the following week. So we're going to take Apple as our example here and just kind of break down what we're looking at and what exactly is an IV crush. So we talked about this a little bit in the past in our Greek series. You can find that here on the YouTube channel. And also we mentioned this basically in every analysis that we do. We talk about expiration cycles, we talk about earnings dates, and we talk about the IV. And that is important because people think when they first start out, I was guilty of this 100%, that you always get big moves during earnings. So you think to yourself, oh, wait a minute, I can just buy these far out of the money calls or buy these far out of the money puts. And then if I get the expected move in either way, then I'm still going to realize some sort of profit. But it's really not about the move. It's about the IV, especially over earnings reports. So real quick, an IV crush is something that happens over major news events or earnings reports where the IV actually contracts. So we get expanded heading into an earnings date. That's why I always talk about a run up into earnings or something like that. We're getting some volume in here for earnings. You kind of hear me talk about that all the time in our analysis. So there's always high speculation going into an earnings report because the stock could move up or down really quickly. You don't really know what they're going to say. Forward guidance, forecast, you know what I mean? Quarterly revenue, annual, all this stuff. You don't really know what is going to happen. Now, you have a good idea of what may or may not happen, but still there's a lot of speculation going into it. So that's why your IV is always going to expand because of the high speculation. And how we know that it is high compared to other IVs and other expiration cycles is that we can look here on our chart or on our options chain. All right. So if you just open up your option chain on Thinkorswim or Tastyworks, you can see here that on the right hand corner, it gives us our IV and it gives us our expected move. So when you think about IV, just kind of always think about expected move. That's really all that means. And you can see right here that we have a $5.70 expected move by this Friday. So $150 stock, $5.70 expected move. Not too shabby. We'll take that all day long. So some good, even though the IV rank is below 20, it's at 17. Still decent enough to, take advantage of this if we would like to. Now, if you go further out in these expiration cycles, you can go to the following Friday, 33. The third week or the second week of August, 31, your monthly in August, 30, you go out to September, it's 30, 30, 30, all the way down, you're in the low 30s. So what does that tell us? Well, it tells us that all the IVs in here, because this is the highest IV, right? Even though it's got the lowest expected move, it still has high IV. So the IV is still the highest in this earnings expiration cycle compared to all the rest of these. So there's high speculation here because this is the earnings. This is the expiration cycle, which contains the earnings, right? So earnings is July 27th. This expiration cycle is on the 30th. So what does this tell us just by looking at this? Well, we already know that there always will be an IV contraction or an IV crush. We know that for certain. No matter if Apple goes up $10, down $10, up 5, stays the same, whatever, implied volatility in here will crush. So we know that for certain, but how much we don't really know. Okay. So we compare all these other earnings expirations. So, or the IV in these other cycles. And you can go to August, you're at 30, September, you're at 30, October, you're at 30, and we're at 39 this Friday. That gives us a good idea that we're probably going to contract. This expiration cycle is going to contract 9% down to around 30. That's kind of where everything is. So we don't know for certain, but we do have a good idea that that's probably what is going to happen. All right. So if you would like to take advantage of this, we always suggest, or I always suggest, to sell premium for these earnings because you think you can just purchase something far out of the money, a far out of the money call, far out of the money put. You're going to get that move that you want, but the IV is going to contract and suck out some of your premium. So that's going to be, you're going to be long Vega in here. You're going to be long, or you're going to be short theta as well. And you're either going to be really long or really short delta, but that IV is just going to suck your premium out. So what we can do is that we can put this in our favor and put on plays that put this contraction into our favor. So when we do get that contraction, no matter how large of a move, we can still realize a profit rather than, oh, we got the move we wanted, but the IV sucked all the premium out, so it didn't matter anyway. We barely broke even, or we even realized a small loss. Okay. So that's all earnings IV crush really is. It's just going to be this implied volatility. The speculation is expanding going into earnings, it expands. And then after that earnings report, everything just sucks out of it because the speculation is no longer there. We know we have the news gathered of what happened. You know, we have the forecast now. We know exactly where the stock should or should not be trading compared to other in its sector, etc. So it's kind of all speculation going into that earnings cycle. And then after the earnings, we go, oh, okay, so this is where we kind of should be at. And then either you get a nice pop or you get a nice pullback. So we just had Snap had earnings this past Thursday. And actually that was a over 3 times expected move, what we had. So that was a crazy, crazy move. So there are some outliers. There's some tail risk always involved in these. So, but the thing is, you wouldn't want to go out on Thursday and load up on a bunch of $85 snap calls for 1 day expiration, right? You want to buy something at 5 delta and just hope and pray that you get that move. Obviously, if you would have got that move, you would have made a little bit of money. If you would have bought the 80 calls for like 15 cents on Thursday, you could have sold them for like $1 on that Friday morning. I get that things like that happen, but overall, you always are going to have a big contraction over earnings with that implied volatility sucking out. So if we open up our expiration cycle here for July 30th, we can see that Vega, this is one of the Greeks that we talked about, and this is how we calculate the percent move in the IV compared to our premium and what we expect to gain or lose. So we can go in here and we can see exactly what our Vega is for certain strikes. So the 145 puts, Vega of around 8 cents. So if we have a, a 5% move down in our Vega here, a contraction in our Vega, we know that or in our IV, that our Vega is going to move down right around 40 cents basically to the negative for this 145 put. So even if we do get a nice dollar move here, perhaps in Apple or, a 50 cent move, something like that, we are going to lose a lot just in our Vega. And that's not including our Theta as well. So if you're playing long options going into earnings expert, you have time decay definitely going against you, but you also have Vega going against you on that IV contraction. So that's why, again, we always kind of suggest selling premium because that's going to put us with short Vega. And that's going to put that IV contraction, that IV crush into our favor for earnings. If you are going to play something long, we never really suggest to do something over earnings here. Obviously, like I said, Snap, there's always outliers like last week. Twitter as well, a little bit. But overall, your best bet is going to be going out to these further dated expirations where IV isn't going to hurt you as much. So if you go out to August and you're buying the 150 call here, your Vega and your IV is not going to hurt you as bad on the contraction as this Friday here. So you can see we're at 39 on that Friday. We're only at 30 here. So even if we do get a contraction here from 30 to down to what, like 29, maybe 25, if that, it's really not going to hurt you because there's still some good premium sucked down in here at the 150s, right? You can see your Vega is high, obviously, but your percentage of your IV contraction is not going to be that large 9% that is going to happen in this expiration cycle here. So kind of rambled on there, but hopefully that made sense to you guys of what is exactly an IV crush and kind of what to expect over these earnings reports. So basically just kind of think of it like this. You have a lot of speculation going into a large news event. That event happens. We now know kind of where that stock should be trading relative to itself, relative to the whole market, its sector, compared to its health, compared to its guidance, forecast, etc. And then you get that speculation that the kind of speculation goes back down to reverses to the mean, right? So it kind of converges back to where the speculation should be. And that's more or less all an IV contraction is. And it's going to affect your premium immensely. So always be aware of your earnings date, always be aware of your IV just in general, your IV rank, your IV percentile, whatever you're looking at. Be aware of your raw IV in that expiration cycle that you're in, and then be aware of how far you're going out as far as out of the money, and then be aware of how far you're going out as far as your expiration cycle. So all those things are going to add up, and it could be the key to you making either a lot of money or losing a lot of money. Okay, guys, thanks for watching. Make sure to check us out on our social media. We have attached links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.